Well, it is The Legal Landscape, Season 6, Episode 4. What are the key differences between public and private companies? If you're interested in starting a company, managing a company, or even investing in a company, you may have considered the differences between private and public, for a private company and a public company. So these two types of companies differ in many ways, and by knowing the differences between the two, you will be better able to establish or invest in a company that aligns with your goals. In this episode of Legal Landscape, we are joined by attorney Jana Griffiths, who is an associate with in the corporate and commercial department at DunnCox Attorneys-at-Law. And she will help us understand the differences between public and private companies. Jana, thank you so much for joining us.
Hi, thank you for having me.
So, Jana, tell us, what's a private company and what's a public company?
Okay, so a private company is a company whose shares cannot be bought or sold to the general public, but instead they're owned by persons usually known personally by the directors of the company. A public company, on the other hand, is a company that has the ability to sell its shares to the general public.
And can you tell us about the advantages of private and public companies?
Okay, so public companies, advantages. So public companies have the ability to raise more funds by equity. So since a public company can sell its shares to the public, the amount of funds that can be raised by equity is usually much larger than a private company. Another advantage is that public companies have more shareholders, which means the risk is spread amongst several shareholders. So offering shares to the public allows the company to spread the risks associated with owning a company among a lot of people. Unlike with private companies, for example, where there may only be a few persons investing in the company, the risks fall more heavily on each person. Another thing is with public companies is it's easy to exit. So if you own shares in a public company and you want to get out for whatever reason, you can sell your shares on the public market if it's listed on a stock exchange. But it will be more difficult to sell your shares in a private company because there's no ready public market. The advantages of private companies. With private companies, there is a greater degree of control. So with a private company, there is a greater degree of control of who can be a shareholder, and that makes it easier to ensure that there is support for the shareholders and the director's vision and the plan for the business. Mm-hmm. Another advantage of private companies is that they're simple to set up, they're simple to run. A private company is one of the quickest and the easiest business structures to get started with. So those are the main advantages, I would say.
Mm-hmm. Well, we've answered the main advantages, so let's look at any disadvantages.
Okay, so for public companies, one of the disadvantages is that they're minimal control as a shareholder. So most times, most shareholders, they have little to no control in a public company's business operation. It's usually the board and the major shareholders that have most of the control. Another disadvantage is that the stock market can be volatile at times, which means that there's a greater risk of losing on an investment in a public company. And another disadvantage is that there are onerous regulations. So public companies, they have to comply with various regulations and requirements, which also have stringent penalties if not complied with. With private companies, they have fewer reporting requirements and they're generally not obligated to disclose any of their financial information to anyone except their shareholders. So that would be the main disadvantages of public companies. With private companies, there's a limited amount of shareholders. So private companies, they can only have a maximum of 20 shareholders. So if the company intends to grow beyond 20 years, it has to go public. Another disadvantage is that there are restrictions on the transferability of shares. So when transferring shares, the shareholders, they have to adhere to the restrictions and the conditions that are set out in the company's articles of incorporation. So, yeah, those would be the disadvantages of public and private companies.
As you can gather, we're talking about public and private companies here. We're speaking with attorney Jana Griffiths, who is an associate in the corporate and commercial department at DunnCox Attorneys-at-Law. Jana, can a private company go public or vice versa?
Yes, so a private company can convert to a public company by changing its articles. So when the company has issued its initial public offering, which is commonly called an IPO, where the shares are offered to the members of the public, this is what is referred to as going public. And a public company can be converted into a private company. To do this, the company has to have the maximum amount of shareholders, which is 20, and they would have to amend this article to the effect that it's now operating as a private company. And of course, the amended articles must be filed at the company's office.
Is the process to start both types of companies the same?
Well, in order to incorporate any company, one has to file the business registration form and the articles of incorporation. But when incorporating a public company, one also has to file a statement in lieu of prospectus before commencing any business or issuing any shares. So oftentimes persons usually start out by incorporating a private company and then going public. And other differences are that when incorporating a private company, as I said before, it cannot have more than 20 shareholders. With a public company, there is no maximum. A public company also needs to have at least 3 directors. A private company, on the other hand, only needs 1. A public company must also have a minimum share capital of $500,000, while for private companies, there's no minimum. So that would be the differences.
Well, thank you so much. Really learning a lot here today. Do you have any tidbits that you can share with us?
Sure. So did you know that Jamaica's Stock Exchange, which regulates Jamaica's publicly listed companies, has been considered as the best performing stock exchange in the world for many years?
Okay, so I stopped there and thought, wow, okay.
Yeah.
That's good news. That's a good did you know. Another
Yes,
one we can
impressive.
beat our chest with from Jamaica here on the Rock, one of the best stock exchanges in the world.
Yes, that's correct.
All right. Well, thank you so very much. Another informative episode. And we'd like to thank you so very much, Jana Griffiths, Associate at the Corporate and Commercial Department at DunnCox Attorneys-at-Law. Attorney Jana Griffiths, thank you so much for joining us today.
Thank you so much for having me once again.
Thank you.
All right.
Well, I certainly hope you have enjoyed this episode. And if you have any queries or you would like the legal guidance, you may contact DunnCox at 876-922-1500. That's 876-922-1500. Or visit www.dunncox.com. And join us next week for another in the Legal Landscape series.